What's going on, traders? How we doing out there? Welcome to the show. The SPACs attack is on. We're a little bit early to the show. I will be having Chris join me a little bit later today. He's going to be coming in at 11 time, our usual time. He's doing some articles. Always killing it on the articles. So definitely stay up with Chris's articles. I mean, he doesn't just only write about SPACs. He covers a lot of different areas. He even covers some sports articles. So definitely check out my man, Chris Ketchy. You guys already know where you guys are at. If this is your first time to SPACs attack, hit the thumbs up. We're going to be going and doing a little bit of ticker time before 11 a.m. I got about 13 minutes to go and do some stocks. I'll talk about some that I'm making some good money on. We're going to get into a new pattern. We got a great interview. App Harvest coming up next. You guys, let me know who wants some growth out there. Give me a thumbs up. Let's start the SPACs attack and let's get this show started, man. Welcome to the show, guys. What's going on, traders? What's up? Ken? The PLTR calls ripped. Hey, happy for you if you're making some money out there in the markets. Let me know in the chat if you guys are new. I love to see some new names in the chat. That's what it's all about. But I'll give some shout outs there from everyone that's in the chat right now. I see Yogi out there, the blind trader, Ken, born to be free, always in here. You already know 100% thumbs up. We're going to the sky, guys. Definitely. There's some stocks that are moving out there. CLOV back on the move. Could we possibly have? Possibly a rocket. Who knows? We're definitely going to pay attention. Looks like Daryl's asking me a question. I'm hearing all this about crash. I think we get a melt up before we get the crash. That's my answer to that, Daryl. I think we'll get a melt up before we get that crash. If you look at big tech has been pushing up. I know there's inflation worries, but at the end of the day, when big tech is going to go up on those days, I'm feeling confident. What's going on, Craig? Welcome to the show. I love to see the new names out there. So definitely welcome, Craig. You guys welcome him in the chat. Latterly, what's going on? Prosper Trade in the house. What's up? Welcome to the show. Hey, what's going on, everybody? It's looking like we got some new faces out there. I'm loving that you guys stuck around. Going to check out some SPACs. A lot of people have been saying, but SPACs are dead. No, actually, they've been bottoming significantly and been giving some good gains. One of the things that I've been looking for is just not the 30, 40% gainers, but hey, 10, 15%. I'm definitely going to take. Let's go ahead and let's get into some of these stocks. I'm going to bring up the watch list here, guys. I usually use this watch list every single day, guys, so definitely stick around with us. Look at this move in CLOV from about 13.50 today. It ripped all the way up there past 16. So $3 move in about, let's say, 30 minutes? Yeah, 30 minutes, exactly. What a move. What a rip up there. That was CLOV. CLOV with a nice move up there. ¿Cómo está? ¿Cómo está el dinero? Looks like there's some Spanish speakers out there. Gamer, what's going on? We support the Spanish speakers also. Definitely. Let's keep it going. SPACs are back. What's the DD? I love seeing all the new names out there. This is what it's really all about, guys. I really love engaging with you guys out there. So hit me up in the chat. Let me know what you guys are looking at. What SPACs you like? What SPACs you don't like? Let's go ahead. Come at it. I have no problem with you guys. All right, guys. As you know, we're going to go ahead and focus. What's going on? Is he gone? No, Chris isn't gone. He'll be back. He's coming on, and he'll be on in a little bit. The SPAC Kings are here. You already know. Let's keep it rolling, guys. All right, let's look at what we got. Looks like Born to Be Free has QSI. You guys know we actually interviewed this yesterday, guys. And let's take a look. Let's see if we can pull this up here. QSI. Oh, looking like I'm going to have to hit somebody up. I don't see it on there right now on Benzinga, but guess what? I got it. I still got it for you guys here. QSI. Let's take a look here. It opened up around 1070s, went down towards 1050s, up there now back towards 1060s. I'm actually in this one, guys. I have this one a little bit lower. I'm not mad. I'm looking for it to continue making its move up today. We'll see if we get that move up today, but definitely I'm going to keep this one on watch, guys. This one is moving on its way up. Let's see if it can break 11 today. That's what I would like to see at the end, Boren. I would like to see it back up there through 11 by the end of the day. And then I'd look to take some profit going into 12 on Kappa. It used to be Kappa, now QSI. Definitely, guys, let's keep it going. Let's keep it going. Spaces have done me great this year. Hey, who knows? Let's keep it going here. All right, what's up? What's up, Zing fam? You already know we got the Zing fam in the house. Question for David Lee. I got you. Just bring it back in a little bit, Boris. We'll be having David Lee on a little bit, the president of AppPharvest. So definitely stick around. I got you. I'll ask that question. If you ask it a little bit later, I'll definitely write it down and get it to him. All right, guys, so let's take a look at some of these SPACs, see what we see moving out there. Let's go back to the Benzinga Pro here. The watch list is showing SSPK. Why would that be happening, guys? Looks like we're seeing that pattern continue, guys, that kind of going into the merger vote. FSR also up today, a significant amount, 4.5% up and pushing. I've been calling for this EV move, and a lot of people were like, no, we're not going to get another EV move. That's a pretty strong move, and there's pretty strong recovery there today by Fisker. I did see news out earlier today from INO. So in the vehicles, kind of EVs, I think you pay attention to Chinese. You pay attention to Tesla also today. If Tesla could rip, that would be looking great. Looks like we're getting a pullback down closer towards 604. I was actually thinking about getting in literally at 604. And that would be an interesting price target there for Tesla. But let's keep going on SPACs. Ride pushing up there a little bit, guys, up about 4%, has gone up there towards 1120. And I can't blame it. I know Marcus from we were talking about this on pre-market prep, is trying to get it back up there towards that 1250. It potentially could get up there. I think it could get back towards 1250, maybe even get up there towards 14. We'll keep an eye on this one. Not my favorite SPAC, but definitely, on the radar. All right, let's keep it going. Let's see what else we see out there. What's up? NSTB. Not really my favorite one. You guys know how it's just not in favorite. I can get the NSTB on if you want, guys. I've talked to the CEO. He's actually been on Power Hour before. And he wanted to come on SPACs Attack, but he already had the connection with Jason, so he wanted to do that first. I'll get him on for you. I'm pushing it back a little bit. I wanted to see it kind of switch on over, so I'm keeping that one on radar, but definitely we can keep a watch. Is APPH worth buying? Stick around. You just might find out. All right, guys, let's keep it going. Let's go to the next one up here. Let's see what we see. Looks like someone's talking about GHVI there. Let's take a look at this one. I had been seeing that one moving. The Gores. Look at that one. That one's not a bad looking chart there. One thing you can clearly see is kind of this downtrend that it broke out of. Good, strong candle coming up, down, pushing out. That's what you want to be seeing, a stock doing a little bit of pullback, catching a little volume on the push up. So now next stop, where are we going to stop? I think we're going to get somewhere near the 1670s today. That's kind of the next resistance level. That's what I'd be paying attention to. Let's look here on the 1 hour chart. See how it's kind of moving on the hourly. Looks like there's a nice resistance here at 1587 today at the open, and near that in pre-market, you got a dip down closer towards 1550. That was a good entry attempt there if you got that one, guys. Why? Because if you draw a trend line here, and Alt-T for my Benzinga Pro users, look how this trend line comes right back to that one. I definitely like that look. It's a nice look there, so definitely keep your eyes on that one. Getting a nice lift there today, and we'll see if it continues to hold that 16 on some pullbacks. All right, looks like I got my man, the brains to this show. You guys, sound the alarm. Sound the alarm. The Chrisopedia is here. Chris, honestly, man, I don't think they could live without you, bro. They can't live without you in the chat, man. They said, what's Chris, bro? Where's Chris?
Did they think I got fired or I wasn't on the show anymore?
Yeah, they're just like, yeah, Chris is gone, bro. They got rid of him. They canned him. You already know. Nah, definitely, guys.
No, Chris is here. Chris is here. Have no fear. Working on some articles, as I heard you say, Mitch. I mean, it's SPACs attack, but I will say I heard you on Money Mitch talk about some video game stocks. We have the E3 conference this weekend. So I just wrapped an article of 12 companies, 12 stocks to watch ahead of the E3 conference. That'll be out on the site later today. I'll also share it on Twitter. So for any of you who like video games, and Mitch, guess what? There is a game that they'll be showing off at E3 this weekend that TechCrunch called a combination of Roblox and Fall Guys. It is a playable NFT game, and there is a company that trades on the OTC that owns a stake in the studio. And also, who else owns a stake in the studio, Mitch? Our friend Gary V.
Might have to shoot him a message.
Stay tuned for that article later today, because I think that's going to be the breakout game at E3 this weekend.
Oh, stay tuned. You'll probably see Gary V pick up that and retweet it. You guys already know. Check out that article later today. I'm even going to be looking for that article. I might have to get some inside information. Hit Chris up after. Hit him up on Twitter, guys. Let him know. Hit him up in the DMs. Chris, let me know. What are these 12 stocks? I want to learn.
Yeah, everybody wants to know, right?
Chris isn't only about SPACs, guys. He definitely has some great trading ideas, not only in the SPAC game, but definitely something that Chris and I do on a daily is just talk some stocks. Whether it be, SPACs or outside of SPACs, definitely something to talk about. All right, Chris. So I don't know if you've been seeing out there. There's definitely some movement. CLOV getting a little push. SSPK getting a little push. Not looking bad out there. Looks like we got over 200 people out here watching right now. 266 people in the YouTube. Do us a favor. Let's try to get to 200 likes before we get to David Lee. That's what I want to see. When he gets on, we're going to get to that 200. So if you guys feel the energy that I'm trying to give out today, do me the favor. Support the channel. Support us having great interviews like we do all the time. It's not like we just do this once, guys. We've had a monster week. Yesterday, QSI, B-Fly. These are some monster stocks going into APPH today. And this is one we actually already did. And so we're going to go ahead and expand on it. So definitely, guys, smash the like. Let's get to that 200 goal. Let's get to the next level.
Yeah, and stay tuned for that interview, guys. We have AppHarvest back on the show today. Since David Lee was on last time, they announced earnings and they also announced an acquisition. So, good time to check back in with the company. That's something we'd love to do more on SPACs Attack, right? We talk about these de-SPACed companies all the time. So, after they complete that merger, investors want to know, right? How are things progressing? Is your guidance the same as it was when you announced the SPAC deal? What kind of growth do you still have? Are you acquiring companies? Those are all questions we ask in the original interviews, right? Now we get the answers. So super excited for that interview. Mitch, I saw you point out, a couple QSI, SSPK, right? We're continuing to see that trend, right? And we'll get into that probably after the interview later today. But that June calendar, guys, we mentioned this at the start of June. I told you the dates of these SPAC mergers, and then also Mitch shared on the chart, right, the pattern. We're seeing this pattern as SPACs come back, and you were able to get into some of these SPACs, before $10, and they all have started to move in anticipation of that vote. This is a trend to watch, right? And until we see a bunch of companies dipping below that $10 level again, I think this is going to hold true. It's been a couple weeks since we really saw a SPAC merger go through and for it to fall below that $10 floor. So, but we'll talk more about that later. Mitch, it looks like we got a decent amount of people here. I heard you call out the likes goal. Let's go ahead, guys, smash the like. And then what do you think, Mitch? Should we get started with some headlines here?
Yeah, we can get right into the headlines since we're getting towards that 11 o'clock hour. But I wanted to do something here. I got a little call out here, And I don't blame the guy for calling me out. When you talk about a stock often and you feel like a bullish, you sound like you're giving conviction. It doesn't. I don't blame you, Daryl. Daryl calling me out here. You guys don't have no fear. I love it, Daryl. Call me out, telling me I'm missing out on the black sky, telling me he got $2,000 more of it, telling me that, hey, I'm looking for the black sky to keep moving. You guys saw me go through that investor presentation on one of our shows. So guess what? Guess what I just did? Put an order for black sky, baby. We'll see if we get it. I haven't gotten filled. I don't know why I'm not getting filled right now, but you know how that goes.
Looks like we're at 10:02. Are you trying to get filled at $10, Mitch?
Nah.
But yeah, so SFTW, this is one Mitch called out before, right? For the story. This is one I just said the past 2 days, guys. This one announced their SPAC merger at the same time as Kappa. Kappa completed their merger this week. They started trading as QSI today. All I can take away from that is that the vote date for this company has to be coming soon. So barring any setbacks, I think we get a vote date from this company, in the next few days. And it may not hit the June calendar, right? Which the June calendar is loaded. But we need to start seeing some companies added to the July calendar, right? Because if this trend continues, you have a chance now to get in way ahead of some of those votes, and you only have to be holding, for a month or, more if you want, but you could see those shares go from 10, to 11 just from the vote catalyst. But if you believe in the long-term story, this is a great one to be holding, in my opinion, as well.
Yeah, definitely. I'm going to definitely keep this one on watch, and I'll let you guys know if I get it filled. I don't think I've gotten filled yet, but definitely I have an order out. It's just sitting there, but we'll see if I get filled. You guys know how I like to get my little cent down, but definitely we'll see if we get it going. All right, let's get into everybody's favorite time. We do this every single day, guys. So if you guys are new to the show and you haven't seen it before, we always go through the headlines. This is, I think, if you just came here just for the headlines, I think that would be worth it enough. Just that alone. So we give excellent value right off the top. Take us back, Chris. What are the headlines today and what's moving out there?
All right, guys. Yeah, so let's dive into some headlines. We also have a deal to talk about today, and then we will get into that exciting interview coming up a little bit later. So up first, two former SPACs, both getting news in the same story. We have SKLZ and PLBY. This is Skills and Playboy. Last night, it was announced that Playboy will be doing the Summer of Play, which will be weekly mobile gaming tournaments running with Skills. So Skills, again, able to partner with some leading brands for these, these gaming tournaments where people can earn real money. And also Playboy, right? We all know what Playboy was as a brand for years. And now they've transitioned, into NFTs and into consumer products, and licenses, right? Let's face it, Playboy is still a large brand, which has huge licensing power. So here you have some mobile games coming under the Playboy brand, which I think is a catalyst for both of these companies, right? Because it shows what they are all about. Then we had the Gleo, Gleo, so Shapeways, the company going public with this SPAC, reporting earnings last night. We, of course, had them on the show not too long ago. So first quarter revenue up 11%, gross profit up 30%. So this is a 3D printing play, right? So revenue is $8.8 million in the first quarter, gross profit $4.1 million. Gross margins also improving to 47% compared to 40% in the prior year's period. And that was due to a high value product focus, continued operational improvements, and further software development. So it depends on which way you're looking at that. That 11% revenue growth doesn't jump off the page, but those gross margins improving and that being due to the fact that they have, operational improvements and a focus on high value products, that jumps off the page to me, right? Because I want to see that bottom line growth as well. So keep an eye out on GLEO. This is one that I own, a 3D printing play. So keep an eye out. And then I saw someone in the chat mentioning this one as well, but on headlines, we have AACQ. So Origin Materials launching a net zero automotive program with Ford Motor Company. Everyone knows who Ford is, right? So Origin Materials landing a huge deal here. They're going to leverage that patented disruptive technology platform that turns sustainable wood residue into cost advantage carbon negative materials that reduce the need for fossil resources. So this is a ongoing partnership that can be used for Ford's applications in SUVs, trucks, electric vehicles, and more. So that again was a net zero automotive program between Origin Materials and Ford. These sustainable, plastics and other plays are ones to watch going forward. They're huge in the ESG space. And, that's an important growing market. And as they expand with some of these, key partners, I think they should be watched. Then another story out here, we talk some of the cannabis SPACs and stocks sometimes. So GNRS, this is a cannabis SPAC. They're actually voluntarily delisting from the NASDAQ to the OTC. And this has to do with NASDAQ cannabis rules, right? So right now, because this country is not federally legalized for cannabis, you can't be publicly traded on the major exchanges depending on your operations for cannabis. I think that changes in the future, but right now the majority of the cannabis companies trade on the OTC. So GNRS, rather disappointing here because of course it was a NASDAQ SPAC, but unfortunately it looks like they'll be moving to the OTC. So it probably will not be getting quite as much attention. So keep an eye out on this one. Then UWMC. So I heard this mentioned on an earlier show. This was actually my headline that I got out there in Benzinga Pro, right? Matt Ishbia is appearing on Mad Money tonight. That's the CEO of UWMC. So the shares were moving this morning. They were up, I think, about 5%. Looks like we're up about 3% now. This is one that's traded well below $10 for a while. Also, we have Kramer, who has gone back and forth on SPACs, right? Some days he likes them, some days he doesn't. Sometimes he forgets that the companies he likes actually went public via SPAC, so maybe he shouldn't hate on SPACs so much. But UWMC CEO appearing on Mad Money tonight. The one thing I will say, shares are up, but remember that today is Friday. Mad Money is appearing tonight. Will investors still remember and focus on the story come Monday morning when they can buy and sell shares again? You will have some after hours trading opportunities tonight, but a Friday night appearance, I just don't think gets the same action into this stock. We had 3 mergers approved. CCX, that will start trading as SKIL. VGAC merger approved will trade as ME. SSPK merger approved will trade as MAPS. Mitch, I don't know if there's already a company out there with the ticker WEED. I don't think there is, but I'm wondering if someone has that ticker on lock. But I was really hoping that Weedmaps got the ticker WEED, but instead they got the next best thing, right? MAPS. So I do own shares of this company. I think it's a great cannabis thing behind the thing play. And as you heard me say, right, a lot of cannabis companies can't trade on a major exchange. Weedmaps can because of their operational footprint. So keep an eye out on this one. And today we are celebrating the 1-year anniversary of the de-SPACing of Nikola Motors. So King Tut SPACs on Twitter, shout out to you. I saw your tweet that this is the 1-year anniversary of Nikola getting de-SPACed. Remember, this was one of the biggest deals out there. Shares rocketed up only to come crashing down. You could say that, they rolled down the hill. But Nikola, the 1-year anniversary. So definitely, some stories out there on this event. Then movers yesterday on those deals, we had TMTS up 1%, BSN up 1%, and VENA flat. So as I said the other day, we actually saw a couple of the deals trade down on the day, which had been the first time in a while that had happened. But now you have all 3 from yesterday at least trading flat. So it looks like some of these deals at least being received that way. And then update on a rumor. So BuzzFeed, which was in talks with ENFA, looks like they're in talks to raise $200 million in bonds, which could be part of that SPAC deal to go public. So keep an eye out. ENFA looks like we're getting closer to that deal being announced. And then our big deal announced early this morning. We have ticker YAC. So sports e-commerce company Zynga Sports going public with YAC, valuing the company at $3.2 billion. This includes a $300 million PIPE, which includes an investment from Ron Burkle, who heads the YAC SPAC. Zynga Sports also acquiring Wiggle CRC, the second largest online bike retailer globally, as part of the deal, expected to close in the second half of 2021. So the combined company will be one of the largest pure-play e-commerce companies in the sports sector in the world, with over 7 million active customers, over 1,000 brand partners, 500 plus connected retail stores, and a global user base of 15 million combined. They're one of the global leaders in some fast-growing sports categories. Their segments include bike, tennis, outdoor, and team sports. So they see that acquisition of Wiggle CRC helping with their growth ahead. They're also looking to expand market share in Europe, which is their largest market, while also accelerating plans for U.S. and international expansion. So they do have a couple pending acquisitions of Midwest Sports and Tennis Express in the U.S. that they think can help boost share here. They see a global market size of $1.1 trillion for that ginormous sports sector. They also see trends in health and lifestyle, digitalization, e-mobility, and a shift from physical retail to online, helping them go forward. Revenue expected to be $1.6 billion for the full fiscal year. EBITDA of $70 million expected. They grew revenue by 40% year over year in their core markets in the last 12 months. And their organic growth has risen over 25% annually, according to the company. So, Mitch, YAC deal, and I'm wondering if you can bring this up on our helpful tool, Benzinga Pro, which we use every day on here. And Mitch, I don't even think I told you this, but maybe you saw the message from Zoli. We actually broke this deal. We had an article out at 12:36 a.m. Eastern time to announce this deal, which was about a half hour before the company announced this merger. So shout out to Zoli for getting us another exclusive deal. And also, Mitch and viewers, I believe we're going to have Ron Burkle, the CEO of YAC, on the show next week.
Super exciting. Super exciting. You guys heard it there. An exclusive release just on SPACs Attack. You guys already know how we do it. We've been telling everyone in the world, we are the best SPAC show in there. And there's no one that can really compete with us. Yeah, there'll be other shows that want to talk about SPACs, but no one's going to bring the interviews. No one's going to bring the exclusivity that we can get access to. So definitely stay tuned, guys. Up next, like you guys see on the bottom there, we got David Lee. I see him ready. I see that smile. You guys already know he's going to be coming up next. So let everybody know in the chat. Let David Lee know. How do you guys think about App Harvest while he's coming on? Can we get towards that like goal 200? You guys smash the like. Chris, let's go ahead and let's get into everybody's favorite time where we unlock some SPACs. We've actually done an interview on App Harvest before. So definitely what I would recommend is after you see this interview, go watch that one. You can definitely probably base both of them and get some more information. All right, let's go ahead and let's get into that. This is the time where we unlock some SPACs.
All right, guys, another exciting interview. Welcoming back to SPACs Attack, we have David Lee. David Lee is the president of AppHarvest. That ticker is APPH. He joined the company in 2020. Prior to that, he worked for companies like Impossible Foods and Del Monte Foods. He is now helping AppHarvest with their operations going forward. Welcome back to the show, Mr. David Lee.
It's great to be with you again. I'm excited to follow up on our first interview. A lot has happened since that time.
Definitely. We got some questions for you. So I'm, of course, let Chris go first, and I'll be back with some of my own. But I do see that smile.
All right, guys. So yeah, let's dive in here, David. We may have some newer viewers out there that weren't able to see that first interview. So before we dive into those questions, just give us a brief overview on what AppHarvest is all about.
Well, AppHarvest is named for Appalachia Harvest because we are creating large-scale, technology-enabled, controlled environment ag facilities. In fact, our first facility in Moorhead, Kentucky, it's 50 football fields large. It has a reservoir that recycles all of the water we need. And that reservoir is 70 Olympic swimming pools large. So this is a 2.8 million square foot facility that was stood up in the middle of COVID. And the good news is later we can get into our first quarter results, but it's producing a lot. And it's the reason why we're confident that we're going to have 11 more, 12 by 2025. And sooner than that, interesting new facilities that take us way beyond vine crops, which we're happy to talk about.
Yeah, perfect. So one of the things I see here in a presentation is talking about the agricultural crisis. So just give some background on, the growing global demand for food and how AppHarvest can play a role in helping with this problem moving forward.
It's incredibly important that the message gets out. The United Nations predicts that we need 50+% more food by 2050. And 2050 is not a next generation problem. It is our generation's problem. But the problem is we need 50% more food, whatever you choose to eat. And at the same time, today we're already using 70% of all the fresh water in the world. That combined with the fact that the way that we make food is one of the greatest contributors to climate change means that the math just doesn't add up. Whether you're rooting for AppHarvest or anybody else, the world needs to recognize this problem needs to get solved. And I think will be solved. And I think it'll be solved because consumers are now demanding that it gets solved. At AppHarvest, we don't have a demand problem. We produce something like, 3.8 million pounds in just one quarter, the first quarter of our operations at just one farm of tomatoes. And there's plenty of demand by American consumers who don't want imported products covered with harsh chemical pesticides that do pretty strong damage to the climate we need, and frankly are not designed for good health. So by offering a better product, by having consumers demand it, and by operating at scale, and that's what sets AppHarvest apart. Our farms are very large. That allows us to fair share the cost savings and get to scale faster than most.
Perfect. So I'm already seeing some of the questions flow in here from our viewers. And one of the questions is the next topic, talking about what are their crops. So we talked tomatoes before, but in this presentation, I'm seeing a 2021 timeline talking about 30-acre strawberry construction beginning in the second quarter, final completion in the third quarter, and then 10-acre leafy as well. Can you give us an update on the timeline for some of these crops from AppHarvest going forward?
Yeah. Our first facility that we talked about in the last interview was designed to produce one of the most ubiquitously consumed fruits and veg, which is the tomato. Whether you enjoy a tomato on the vine, a beefsteak, you like it in ketchup, or you like it fresh, we wanted to prove that we could be in the heart of the market. That was important to us. And at Moorhead, the 60-acre farm that we stood up and produced for the first time, we proved that we could serve the heart of the market, but we also proved that we have the technology and the management team to stamp out 11 more of these things quickly. In fact, we're going to have 5 farms, large-scale farms, operating by the end of 2022. So this isn't a theoretical idea. This is ongoing. In fact, we've already broken ground, and we've talked about a couple of them already. But importantly, our technology isn't just for vine crops, which are tomatoes and peppers and cucumbers. It also includes berries, which we're excited about. And soon we will have our own leafy green facility. And 1 out of every 10 consumers in the U.S. eat enough fruit and veg. It's kind of the most unspoken about growth category that is now available to the public investor. And we intend to provide not just vine crops, but berries and leafy greens soon.
So since we had you on the show last, we also got, a quarterly earnings report. So first quarter, $2.3 million, 1 facility in operation, and 3.8 million pounds of tomatoes sold. And also noting that farm was only partially, ready to go. So give us the keys from the first quarter. What are the biggest takeaways for investors from that earnings report?
Well, I think there are a lot of critics when a new company goes public, and it goes public at a time. We started trading on NASDAQ under our own ticker on February 1st. I, by the way, have been on the board since August, but I joined as president almost to the day, or maybe a week prior to start of trade. And we had a lot to prove. Can you go from 20 employees to over 500? Is there a great source of local labor? We may be the only ESG-oriented company that says we can do better for employees too. We can train skilled labor local to Central Appalachia, a region devastated by the end of the coal mining industry. We don't need to deal with H-2A or migrant labor because we have the benefit of home-growing labor at a time when so many companies today are saying that there's a labor shortage. Let me tell you, we have no shortage of interested participants in our business. And so for us, the biggest takeaway was proof of the story that we could be a large at-scale producer of technology-enabled fruit and veg that's better for the world and it's better for your health. It's important. These 3.8 million pounds of a partially seeded facility, one of only, 1 out of the 12 that we'll have, this was a proof point on the ability to produce, the ability to make the business model work. And we recycled all the water, the rainwater that came into the facility. So it was a proof point for the ESG impact. It was important for us to demonstrate we could operate at scale. And it's also a proof point in the quarter on our ability to fund our growth. We announced in the Q call a very attractive 60% loan to value facility that we are imminently closing on that allows us at a very low cost of debt to leverage the fact that we have real assets, like a real technology-enabled farm that's immense, with more to come. We also talked about the fact that we're very confident that in this quarter, we will be able to close and announce construction financing for the facilities that are already underway. And unlike a lot of companies that talk about cost inflation or lack of labor, listen, we fully already locked in for the 2 facilities we're talking about, the glass and the steel, because we had a notion that while people were underestimating us before, we were going to grow at the pace we announced. And so here we are, I think finally showing results that show that the business model is on track.
Public and financials, and obviously, there's a bigger spotlight on your company now. One of the things I noticed from that first quarter was we have guidance for the full year of $20 to $25 million. The original guidance given back in December was $21 million. We're going to talk the acquisition next. Where is the new guidance coming from? Is it related to that acquisition, or is there, something really moving for the company that maybe wasn't priced in back in December?
Well, let's talk about December. This is the time when the company was not yet even trading under its own ticker. It was, just prior to me joining as president. And so the team has rounded out. It was before we harvested our first crop. December was the best possible estimate by a team that didn't have results yet. And so I think the importance of the guidance we provided in Q1 is to say, hey, we have real results. We have hired up from 20 to 500. We are producing millions of pounds of product. We are financing ourselves in a non-dilutive way. And now we can talk about how we want to perform for the year, which, as you mentioned, having 20 to 25 million in net revenue is just the beginning. But it's an important validation that we deliver as a management team of a public company what we say. And you do all a brilliant job of covering so many great companies that have come to market via SPACs. we want to distinguish ourselves from that by delivering on our promises. And a big part of that is how we run the company. We run the company for financial return to our investors, of course, that's a requirement. But we also run the company to be a B certified benefit corp, one of the handful of companies that are traded on NASDAQ. And it's because we think investors and consumers will reward the fact that we give a living wage to all of our full-time employees, that the folks who are working hard on proving this model, that there is American leadership in agriculture again. Something like 69% of all the vine crops that we enjoy here in the US come from outside the US. And we believe that by showing that we can deliver against the promises made, that we can validate a business model and distinguish ourselves as a public company. So for us, social impact is as important as the requirement to great financial return. And we still have a lot to prove, but the first quarter was a big step in the right direction.
Yeah, definitely. And as I alluded to here, we did get an announcement in April. AppHarvest acquired Root AI, an artificial intelligence and robotics company. Tell us about this acquisition, why it makes sense, and how it's going to help AppHarvest in this industry.
Yeah, I wish I could walk with you through the Moorhead facility, but imagine, if you will, for me, this 2.8 million square foot first facility, one of 12 by 2025. Imagine having technology that can adjust to how much sunlight's coming through the glass in the ceiling. Imagine having technology that can monitor each seedling as it grows to determine when you pick it, when should you pick it, how to be able to forecast that. Imagine the amount of waste that can be reduced in a facility where it's totally technology enabled. Before we bought Root AI, we already had proven cutting edge technology, largely from great pioneers of controlled environment ag outside the US. I mean, you need only go to the Netherlands to see a country that has large scale CEA that's one of the top 10, if not top 5 producers of produce for Europe. It's just that here in the US, leaders like AppHarvest are just getting going. So we already had the ability to optimize versus the incumbent industry. And our competition, by the way, aren't other controlled environment ag facilities. Our competition is the imported open field product that frankly is not good for health or climate. With Root AI, what we found was the ability to create our own operating system. There really isn't today for the controlled environment ag sector a great operating system, software connected to devices, connected to automated robots that allow us to increase we already have a 30x yield benefit versus open field. We believe that through technology, it gets even better. And Josh Lessing, the CEO of Root AI, has become our full-time Chief Technology Officer. While we will first use that technology to create our talent operating system for our own farms, it also creates the ability to set the standard and to sell with revenue that's high margin to the very important CEA global industry, which is just getting going. We aspire one day to have almost a AWS option in the long term to be able to help other CEA producers globally with an operating system that connects all the data with the hardware to improve yield. That's the reason why we bought Josh Lessing's business, and we're really excited about. And by the way, we don't buy things in a way that doesn't align to shareholder interests. The purchase consideration was $60 million, as we announced. 10 of it was cash. The remainder is aligned equity interest to post results. And we also posted our expected future results from making this acquisition. We increased our expectations for the economics of the farm in the future. I mean, this is real return on invested capital that internally we are signing up for, because we know that the public investor needs an acquisition to produce return. And so I'm sure you've looked at and can see the slide where we showed before and after on how we think return on invested capital meaningfully improves with the technology we now have.
Yeah, perfect. I want to talk about one of the misconceptions out there, maybe. So in April, you delivered those tomatoes to Kroger stores, and one of the things that stood out was that pricing was expected to be comparable to standard tomatoes. So I think there's this misconception that some of this, non-pesticide, better for you food costs so much more than the existing products we have. Can you talk a little bit about this misconception and then those tomatoes that were delivered to Kroger here?
Yeah, we are not one of the many who I root for. Precious, subscale, premium market vertical farms. That is not our business. Our business is to use our scale and technology, our yield improvement, to produce product that is competitive to the center of the market. And it's unfortunate we're not yet so large that you could go to any grocery store and see the Hills, our icon, the AppHarvest tomatoes and future berries and leafy greens, because then you know what is competitive on price. In fact, we partnered with Mastronardi, which distinguishes us because they have a full basket serving nationwide. They can take every one of those millions of tomatoes we just started to produce and get them to the market because they're produced at a cost basis that is fair to the center of the market. There is future brand premium value. There's no question that we have a better product, and people are really rooting for a product that's better from a better company. But our business model doesn't count on being high margin and precious. It counts on being mainstream and at mass. And as you saw in our December financials over multiple years, it produces solid return. It produces invested capital and EBITDA at a facility that allows the investor to benefit despite not having the highest price in market. I think it's just, I think the misconception, frankly, is because people can't yet just walk to any grocery store and see for themselves. But we hope to change that. That's the reason why we're doing 12 of these large scale farms by 2025, 5 of which by the end of 2022 in operation. So proof will be in the results, and I think they'll come soon enough.
You mentioned Mastronardi Produce. That was my next question. So they work with some of the top retail grocery and food service outlets. In your first quarter report, you highlighted Kroger, and then, of course, a new favorite retail stock out there, Wendy's. So talk to us about, this relationship with Mastronardi. Do you know which stores and restaurants are getting your tomatoes? Are there any other names that you can share with us? Who has AppHarvest tomatoes in their stores and their restaurants?
Yeah, this reminds me of the time, when I was running the food business at Del Monte and we launched a new product. Until you reach national scale, it's hard for me to say, go to this specific location today. And because our products are produced and can be at 70% of the buying population within a day, they're consumed pretty quickly. So I think we'll need more time before I can point to a specific destination. What I can tell you is the reason why we highlighted, one of many, but we highlighted Kroger and we highlighted Wendy's is because they represent the importance of knowing that we can sell to both food service and retail nationally. And they were important for us to highlight. I think a lot of your viewers, of course, don't know the business that we operate. But if you think, for example, pricing open field produce, right? It swings widely in price from quarter to quarter. Particularly, in the winter months when a lot of open field producers are struggling to make product because it's winter. The advantage of controlled environment ag is that we can produce year round with local labor that's skilled and plentiful. And so I think that in the course of the next 4 quarters, you'll understand a little bit more how our pricing works. And then with regard to customers, serving large scale customers and avoiding some of the distribution and sales expense is something that we share with Mastronardi. We have very aligned incentives. And part of the reason why we highlighted those particular customers is it shows that we're already serving both sides, right? Food service at scale, not, again, a Michelin-starred restaurant at subscale, but Wendy's, and then Kroger, which is one of the largest supermarket chains in the US. And it also shows, we talked about on the Q call and Q&A, that we can manage a lot of our net pricing independent of how the broader market is performing because we can manage some of the contra revenue costs in distributing. And by distributing to large scale players like Wendy's and Kroger, we avoid some of what some in the industry see, which is the cost of supply chain across fragmented consumers. Again, it's I don't want to. We are not there yet. We are young, and we have only one quarter under our own ticker to call it is complete. But I was very encouraged, which hopefully showed up in the Q call about what it said about our future.
All right, I'm going to go ahead and jump in here now. One of the things that I've been looking at, and I'll show this picture to kind of show it. I know that before you were looking at kind of a supply chain on kind of the eastern side. Now it's looking like you have multiple kind of broken supply chain here and trying to solve it. How are you guys going to solve this problem for the nationwide?
Well, first, I can't overstate the importance of location, right? Location, location, location. So if 69% of all vine crops come in from outside the US against this fragmented supply chain nationwide, creating an epicenter in Central Appalachia where we have regional expertise, regional support, and we have construction and engineering access to labor that may not exist if you're far flung across the country. And yet this region, this location that we are creating an epicenter from, it benefits from climate change. You know, in the early 2000s, when I was running the business at Del Monte, or even in the headlines last week, the incredible drought from one of the most important produce producing regions, Central California, is making headlines. Well, one of the reasons why we picked Central Appalachia is what we saw at Moorhead, where we recycle all the rainwater and we use 90% less water. And some would argue that the climate in which we are creating our epicenter, our Netherlands for the US, is getting wetter and wetter. And it being, you know, within 70% of 1 day's transport means that we have the potential of saving across this fragmented supply chain that's being served largely in vine crops by producers outside the US. Think about all the diesel and the trucks that are used to try to get your produce that you eat every day. Well, we're seeking to avoid that. So now technology will help us as well, because if you can manage exactly when you pick fruit and veg that's designed to taste better, that's designed to be healthier, you not only save on cost of goods sold and logistics expense, you provide the consumer something that they can vote for with their stomach, right? They'll come back because you have a better tasting product. That's the idea of highlighting how location, focus, and technology create a benefit for AppHarvest that's very distinguishing, I think, versus the approach by many others.
Definitely, location is definitely going to matter. And one of the things that we can go into, kind of expand on that question, is kind of what you saw out of the pandemic. Now we can finally say, you know, we're trying to really move forward. And one of the things that I'd point out here is kind of that food insecurity look, and how we really noticed that supply chains, especially food supply chains, are kind of in a dangerous zone when we're going into moments like this. So can you explain to me what you guys learned out of the pandemic?
Yeah, the pandemic, what a terrible tragedy for all of us, but what an important learning for those of us who are trying to serve this global problem. By the way, it's global. We're really excited about the business we're building in the US, but we are building a global business with the technology that can serve others. Let's talk about being local. You know, sometimes I think sometimes I get these tweets that say this woke idea of producing in your backyard. Local relative to an at-scale industry that largely produces from outside the US and trucks in product mean that even if you're local in Central Appalachia, you have a huge benefit to creating a solution for food waste and food insecurity. Along a fragmented supply chain, when food is produced outside the US, covered in harsh chemical pesticides, shipped for days, it's harder to optimize reduction of waste. You know, just the amount of food that is thrown away today because of the way in which we serve our customers is appalling. And you know, we're just getting going, but the potential of our model is to manage that supply chain more tightly. But it's also just to manage our resources. You know, the amount of runoff impact from open field farming, the amount of water consumption that we talked about at the start of the call, these are problems that we designed into our business model to solve. Recycled rainwater, having a hydroponic system where there is no soil to run off. These are real advantages, I think, that show up in hard numbers in time. But the good news is the consumer's already asking. The consumer knows more and more about how insecure our food system is and how wasteful it is and how damaging it is to health and to climate. We just have to create the supply, is how we see it at AppHarvest.
All right. So my next question is kind of an interesting one, something that I learned a little bit. Tomatoes really only bloom for up to about 3 days, right? And so I found out that you guys actually use natural pollination. So you guys have honeybees to kind of expand and get the most out of the yield. Can you explain me how this process works?
Well, think about Morehead as, yes, it's producing millions and millions of product. So it's a real production facility, and we're proud of that. But it's also our fully owned pilot facility. It's where Josh Lessing can take a bay and test different technology, software and hardware. It's where we can fine tune how we deal with pests. And I want to be clear, every solution we try in Morehead doesn't go to big national scale. That's the benefit, frankly, of, Morehead is within a drive of Lexington. And that was by design, because it's common practice in technology companies that I've been a part of, like Impossible Foods or Zynga, where you want almost agile development of experimenting with technique and process. Very hard to do when you have far-flung farms across the country or the world with open field practices, with labor that you don't really train or manage. So we haven't committed to announcing a particular solution across all our farms, but we are testing everything, including ways to control our pests. Again, I think it's early. The reason why I'm excited about the company in the mid to long term is, even though we stood up our first facility and did our first harvest and produced for the very first time as a first-time public company, the results were strong enough. And with the amount of experimentation done, I know that we can optimize them for the mid to long term.
Perfect. So David, we've got some excited fans of yours here. We've got some viewers that absolutely love this company, some shareholders in the chat as well. So we do have some questions out there before we let you go. Up first, we have a question from Daryl asking, how many more states in the area are they going to move into? So do you have any idea with your partners how many states your products can currently be found in? And will you be able to reach all 50 states soon, if not now?
I can't tell you today how many states you're going to find our product in. It's a function of still producing at a fraction of the potential of the company. I can tell you that our distribution partner, Mastronardi, was picked, and they're confident in nationwide demand. Listen, one university in the Netherlands predicted something like 17 to 20,000 more acres required in the US of controlled environment ag facility just to displace what we import. Forget about American farmers who we root for, but just all those products that are imported that aren't great. 17 to 20,000 acres. And, here we're talking about doing 12, and our first one's big, it's 60 acres. But the point I'm making is demand is not really the problem. American consumers desperately want better fruit and veg. And they're increasingly aware that, one, they need to eat more of it in general, but that what they eat isn't great. And so I think over time, when I have all 12 of those facilities up by 2025, I can commit to answering the question specifically, but I don't want to make promises I can't keep at this point. We're still growing. With regard to what I can tell you on the 12, the development front, we are far more underway than folks realize in knowing where we will build our 12 facilities. We're really focused. This is one of the things that having Jonathan Webb, our CEO and founder, grow up in Central Appalachia and know local government well, has meant that we know years in advance where we're going to create a new form of economy. And it's so well embraced because of the economic need in the US and that part of the world and this part of the country, that while we haven't disclosed more than the 12 by 25 and the 5 in operation by the end of 2022, there's a very good development team underway on having impact on production.
Perfect. And then a question from Solar Up. Is AppHarvest working with gene programming companies, mentioning Ginkgo and Benson Hill, to enhance operational nutrients and yield? Any partnerships with these companies or others that you can discuss with us today?
Well, first, to be clear, I am on the board of Benson Hill. and know that company as a result very well. I'm the audit committee chair. And I know Jason Kelly, the founder and CEO of Ginkgo, and I'm incredibly excited for the progress of that company and the impact that synthetic biology can have in the world. I'm proud of both those companies. But today we're not disclosing any particular arrangement with anyone. I will tell you, because we are in our heart a technology company, we look at everything. We look at every form of seed, whether it's right now all our seed is non-GMO. We really like the idea of using what nature provides, but we have looked at all of it. And the good news for AppHarvest is because of the management team, we kind of have access to all the technology that we could choose to use. But today we're not announcing any particular deal with anyone.
All right, the last one we got from Boris Cat David Lee here. Can we expect future AppHarvest berry plus veggie boxes shipped directly to the home, or maybe like on a subscription basis? Anything in that sense?
It's so interesting, this question. Well, first, we're not announcing our direct-to-consumer program. I can point you to work done in prior lives. I can point you to at Impossible Foods during the pandemic, we stood up a direct-to-consumer program that we're really proud about in no time, really. It may have been one of the fastest DTC launches in new food. I can also point you to other companies that have solved a lot of the problems that cynics have about why great produce companies can't do what is being suggested. Look at Imperfect Foods, a private organization based in the San Francisco Bay Area. Look at Daily Harvest. People have figured out a way to get consumers heavy produce products, but still nonetheless in an economic form. So I think there's great promise in this idea of direct-to-consumer. I certainly have in my former life at other companies been able to announce the launches of those. But today, we are not announcing a DTC program.
Awesome. Well, that's going to do it for our questions and those questions from the chat. Shout out to our viewers for always dropping, interesting questions along the way for our interview guest here. So again, joining us on the show, David Lee, the president of AppHarvest. That ticker is APPH. David, thanks for taking time out of your busy schedule, joining us on the show. We'll look forward to following the progress and talking to you in the future as well.
Thanks, guys. It's always fun.
Always. Thank you. Appreciate it.
Take care.
Well, you guys, I have to say it right off the back. I didn't get a chance to say it with David, but definitely, I really appreciate the transparency of trying not to say something that he can't fully see there, and so I really appreciate that, coming from a SPAC industry viewer that sees all the different SPACs. That's what I like to hear. I wanted to go ahead and stay with a company that wants to continue just meeting the mark that they're putting out there. And then from that point, if they go and surpass the mark, then let them go ahead and surpass the mark. But I appreciate that. I know you do too, Chris.
Yeah, absolutely. Saying he's not going to overpromise. I love that transparency. There was some new stuff today. I like the talk of that acquisition and how it's going to help. And, location. I mean, they're going to be able to touch, every area of the U.S. And then also, you can find their products in Kroger stores. And then also, I mean, Mitch, they're in some restaurants, right? So Wendy's highlighted on that first quarter call. I mean, this is a company that I think is going to get some strong brand awareness in the future. Really right now, it's all about scaling, right? I mean, you heard him say demand is not the problem. That people want this food. People want these tomatoes. And, I always had that misconception too, right? That these better for you fruits and veggies were so expensive, right? And that was what kept people away from them. And now through AppHarvest technology, the price point is going to be the same. I mean, which tomato are you going to choose? The one with the pesticides or the one without, if price is no longer an issue? I mean, I think that's where we're going to reach here.
Yeah, one of the things that I mentioned is that at the end of the day, I mean, when you look into their technology is not something to mess with. I think they really have an understanding, because I've seen other companies in this vertical space, and one thing I don't see a lot of the times is what I'm looking for, which is what separates you. So do you have like a lighting system that separates you from others? Do you have, like right here, we're seeing recycled rainwater. Okay, so you're not even using water up, so then you're putting it back. Artificial intelligence, robotic harvesting. You know how that makes sense. I mean, definitely, with the kind of, this is coming from an area that, like if you look at the other option, like outside farming, you're having people pick, you're having touching and all this kind of things that you got to be worried about. And really, they kind of get around this, the precise growing, the integrated pest management. I talked a little bit about the honeybees. Like, did you guys know about that one, about the honeybees, and that tomatoes only bloom for up to 3 days?
I didn't know that. That was a great fact that you found, and I loved his commentary on it as well.
Definitely, guys. So check it out. I mean, it's expected to be sort and shifted 45 million pounds to be grown annually. And one of the things is this is delivered fresh with 80% less diesel. And in an environment where we're so worried about carbon, right? And we have a now supporting government for this, I think you might even see some help. You could even see government help from this. Moments like this is really what's going to change the industry. I think this is what you call disruptive technology, guys. So definitely, I'm going to keep an eye on these. There's a couple of vertical integration. We've interviewed another one also, so we're going to keep an eye on all these.
Yeah, perfect. So, another great interview here. I enjoyed having him come back, give us the update. As I said, I think we need to do that with more companies. So we're going to reach out, so if there's a company that went public via SPAC that you guys in the chat want to hear from again, or that we haven't had on the show, let us know. Drop it in the chat or hit Mitch or I or both up on Twitter, because we're reaching out to more and more guests and, filling up this calendar. Speaking of calendar, we've still got this exciting June calendar. We're on the 11th today, which is actually my oldest son's birthday. So shout out to Harrison. Happy birthday today.
Shout out, Harrison. Shout out.
June 11th. Happy birthday. So that June calendar, one of the things I want to remind everyone out there is that as the owner of shares of a SPAC, you need to make sure that you are voting on your shares. So whatever brokerage you use should send you an email or a packet in the mail with the information that's needed on that vote. And one of the votes that we have coming up later this month is Forest Road, that merger with Beachbody and Mixed Fitness. And I saw a video the other day from Carl, of course, the founder of Beachbody, that was on the show. But also today, Mitch, I heard someone else reminding shareholders to vote on their shares of FRX. So maybe we can tell our viewers who would like them to vote.
Hey, well, I'll do it this way. You can just listen in.
Hi, FRX shareholders. This is Shaquille O'Neal, Strategic Advisor of Forest Road Acquisition Corporation. Yep, this is Shaq. I'm a big believer in the power of all investors, big and small, which is why I'm asking you to cast your vote in connection with our three-way merger with the Beachbody Company and Mixed Fitness ahead of the shareholder meeting on June 24th. As a shareholder of FRX, as of May 6, 2021, you have the right to vote. From my championship days, I learned that every teammate has a role to play. One team, one dream. The same goes for this Beachbody team. Every vote counts, so please vote as soon as possible before June 24th. You should have already received the proxy materials with voting instructions. If you have any questions or need assistance in voting your shares, you can contact your broker or our proxy solicitation firm, Morrow Sodali, at 1-800-460-1014. Once again, that's 1-800-460-1014. Thank you, and remember, your vote and your voice matter regardless of how many shares you own. Thank you very much.
Yeah, I think that's important, right? And not every company is going to have a celebrity that can, do a video like that. But shout out to Forest Road for, using Shaq, who is an advisor on this SPAC, to really drive home that message, right? We've seen a couple, not recently, but some SPAC deals that actually got delayed, right? Because they didn't get enough votes to complete the deal. SPACs are starting to see momentum again, right? We're in a good market for them. The last thing we want is some of these votes to not go through just for the simple reason that not enough people voted. If a vote doesn't go through because people didn't like a deal or because the terms changed, that's different. But for a vote to not go through just because not enough people voted, that's a setback for the whole SPAC market. So as I said, this June calendar, if you own shares, there's a good chance that you have a vote to do this month. So keep an eye out on your email and your mailbox. Mitch, I heard you before I joined. We had CCX, VGAC, SSPK moving. The other one I want to highlight, of course, is ACTC, ArcLight Clean Transition. The vote for Proterra is today. So we should get word later today that vote went through. This is still one I own and I'm watching. This is an electric bus company that I think gets some deals. And I think we could have a mini rally next week. Again, full disclosure, I own shares. But I think maybe we see 20 next week. I think this could be, the next SoFi or Bark, where it's a really good company that was beaten down for a while. And as the SPACs come back, this is one that's going to get more love, for that growth ahead. What do you think of Proterra here?
All I got to say is me. Me, baby. I actually sold some shares of VGAC up at 11.15 today and looking to sell some more past that level if it can get back up above that. And that one's going to be trading as me. So definitely looking forward towards that switch over. Another one that I have, guys, I don't have CCX, but CCX, what a nice move there. This was one that came off that $10. Look at that. Look, no one can tell me the pattern doesn't exist when things like this show up.
Yes.
And when you get, I'm sorry, but when you get also like Julian Camacho also talking about this pattern and then telling you, let's look at it. Let's see what happens. This is what happened.
Yeah, CCX and VGAC, that's what I was going to say. Both called out by Julian right here on our show. That 10 to 11 move is very key right here, and it's been happening a lot. And, for people who, you don't have to keep holding shares. I mean, you can join in that 10 to 11 move. I mean, that's a decent profit.
10%.
10% in a short amount of time, right? I mean, and that's why I keep bringing everyone back to this June calendar, right? So if you get in on some of these votes, I mean, there's a couple that vote next week where they're trading at about 10.05, 10.10. If all those end up hitting that $11 mark at some point, again, those are more 10% moves. So, Mitch, let's hit on. So next week, I see FAII, that vote for the merger with ATI Physical Therapy. That's on the 15th. They were on the show not too long ago. Looks like shares about 10.10 today. That's an interesting one because it didn't really move for a long time. And I'm wondering, again, will we see the 10 to 11 move out of all of these, or will we have to see, some laggards in there too? Also CRSA voting on their merger with LiveVox. That's on the 16th. So next week as well. What's that one at? 10.13. So again, it started moving up from that $10 mark, about a month ago, but 10.12. And then the other two votes next week I see are ACAC on the 17th, which is for Play Studios, a mobile gaming company. I think that one's actually at $10 today. $9.99 is what I'm seeing. So that could be the next one to take a look at. And then HEC with Talkspace, also at $9.99. So next week, Mitch, could be a real test because we've got a couple that are at $9.99. And will we see that move next week or not?
All right, kind of a beginner question here, but I wanted to get it answered, and that's what it's all about. It's a new person in the chat. I haven't seen him in the chat before, and so welcome. Kristen asking a question here. Kristen Lane asking, what's the difference between CCIV and CCX? Can you explain this, Chris?
Yeah, so Churchill Capital, led by Michael Klein, launched several SPACs. And they all raised different amounts of money. They all went public at various times. So CCX announced a merger with Skillsoft. So that's one SPAC deal there. And then CCIV announced a SPAC deal with Lucid Motors. So both of these tickers are owned by the same SPAC family, but they're two separate companies with two separate SPAC deals. And then also the timing's going to be different. So CCX, that vote went through this week, and it will change over to SKIL. And then CCIV has not announced a vote date yet for Lucid Motors. So great question out there. Great to see a new face in the chat as well. Good job finding that one, Mitch. But yeah, so some of these SPAC families, they have, a lot of tickers, and sometimes they can get kind of confusing. Same thing with Chamath for a while, right? Where we had IPOC, IPOD, IPOE, IPOF, all trading. Those are all separate companies, but eventually those tickers change, when the merger gets completed. Mitch, what do you think of the... Speaking of tickers, I mentioned it in headlines. What do you think Weed Maps, MAPS? You think that's a great ticker to snag here?
You've heard me talk about Weed Maps before. I'm not the biggest fan of the business, just because I don't feel they have really a competitive advantage. What they have a competitive advantage is that a lot of people are using them as the number one go-to to, let's say, find a dispensary. And so I think, yeah, that works now, but doesn't Google do the same thing?
What do you think of the ticker, though? You think that
the ticker Maps? I mean, you wanted to see weeds, but I think the ticker itself is not a bad name. It's not like I don't think it's like Bee Fly, but Long View Bee Fly. I thought that was a better mix, but yeah, it has a little edge there with Maps, because that's what they are essentially. I think that's what it is. It's a Maps. It's a Maps ability to get you to what you want. The biggest thing, the difference between Google and them, I'll tell you what the difference there. The difference is that when you go to Google and you find one, you can't order off of Google. And so that's the difference there. You can order straight off of Weed Maps.
All right, guys. Looks like we're out of time for the day. Another great show, another great interview. As I said, that YAC deal exclusively broke by Benzinga at 12:30 a.m. We have Ron Burkle, the CEO of YAC, joining us on the show on Monday. Don't miss that interview. That deal was just announced today, and we'll have him on and talk about what this e-commerce sports deal is all about. Hope everyone has a great weekend. Stay tuned for Power Hour coming up next.
Definitely, guys. We had a great week, great interviews. If you didn't catch the interview yesterday, B-Fly, QSI now, definitely check it out, guys. I thought it was a great interview. Go back, check that out this weekend. We're coming on Power Hour next, guys. Definitely, guys. Let everybody know. Hot Stocks Luke's coming